$400 million evaporated from the crypto market in just 4 hours, and the liquidation cascade ripped through every major chart. Bitcoin is hovering near 115,000. Ethereum clings to 3,600, Stellar prints 39 cents, and Hedera bleeds back to 24 after an 8.5% flush. XRP, the asset in the spotlight, lost roughly 4%, but is still defending that razor-thin $3 line. If $3 holds on the daily, and more importantly, on the weekly close, the broader bullish structure survives. Lose it, and the whole trend spends the rest of the quarter rebuilding. Ironically, nothing in the macro data should have shocked markets. U.S. unemployment landed at 4.2%, exactly the forecast. Yet the second the print hit the wire, leveraged longs stampeded for the exits, triggering forced liquidations that stacked one after another like falling dominoes. That tells you sentiment had grown stretched. Traders used the no surprise number as the excuse to finally hit the sell button. Now liquidity is hunting for a new equilibrium, and so far XRP's $3 shelf is acting like bedrock. Price wicks below, bids refill, shorts cover, and the candle body keeps closing above support. Zoom out a few weeks, and the calendar turns into a minefield. August 15th is circled in red. The SEC must file its final brief in the Ripple lawsuit. Clarity, bullish or bearish, finally crystallizes. Then comes September with a scheduled congressional vote on comprehensive digital asset legislation. If DC sets capital requirements for stablecoins and defines what makes a token a commodity versus a security, institutional capital finally gets the legal rails it needs. Layer geopolitical noise on top. President Trump just hiked tariffs on Canadian imports from 25% to 35%, fuel on the existing trade war. Traditionally, that kind of shock rattles equity markets first and spills into crypto later. But today's liquidation spree shows the reflexes are getting faster. Risk assets of every stripe react in near real time. Meanwhile, the blockchain railroads keep laying track. Robinhood CEO publicly called tokenization the backbone of tomorrow's financial system. That dovetails with Ripple's ongoing push, alongside London-based Archax, to tokenize real-world assets on the XRP ledger. We're talking beyond stablecoins. Equities, bonds, real estate, commodities, everything TradFi keeps on dusty spreadsheets. When those positions migrate on-chain, settlement windows collapse from days to seconds, and every tokenized asset, by design, settles through an XRP pair. Watch Korea for clues that this future is already seeping in. Upbit just processed nearly $3 billion in XRP volume inside a single session, with almost $1 billion net leaving the exchange. Those aren't weekend warrior trades. They look like institutional corridors cycling liquidity. Ripple hasn't confirmed any partnership, but the flow pattern mirrors every prior ODL ramp-up. Massive exchange volumes, deep outflows, then a quiet plateau as corridors normalize. None of this means the bull market is over. Corrections and consolidations are the market's way of ejecting weak hands and resetting funding rates before the next expansion. As long as XRP holds $3, the ascending structure stays intact. Lose it decisively, and 270 becomes the magnet. Reclaim 310 on strong volume, and the chart aims back at 350 in short order. Set alerts for 3 key levels. Daily closes above $3. Weekly closes above the same line, and any intraday push that tags 310 with rising volume. Keep an eye on open interest. If it rebuilds faster than price, another squeeze may loom. Track exchange reserves. Continued outflows alongside flat price often precede upside breaks. And mark the dates: August 15th for lawsuit resolution signals, September for regulatory architecture. One headline could flip sentiment faster than any RSI reading. The bottom line: we're in the turbulence phase of a long-haul flight. Seatbelts on, eyes on support. If XRP withstands this shakeout while institutional rails expand and legal uncertainty evaporates, the token may emerge as the backbone of real-world finance. Exactly when retail panic sellers think the story is finished. Stay disciplined, stay informed, and remember, the biggest moves come after the widest shakeouts.